Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board here, kind of a flat day for the S&P, actually right on the button. It was an unchanged day for the S&P. Look at that, unbelievable, right? Zero change. We had the Dow coming off about 30 points, but we continue to see that strength in the NASDAQ. So we were talking about how the NASDAQ over the last few days, as some of the larger cap stocks have been coming up on bid, the NASDAQ has recuperated or regained some of its relative strength. So the NASDAQ closing up at the 5,551 level there, up 20 points today. We saw the crude backing off. We'll see on the charts this is why this is a bit problematic. Gold rallying and the bonds kind of holding steady after a nice little bounce. But folks, we'll take a look at all of this, and as always, we're starting off our analysis with the S&P 500 dailies. So here's that little bit of a range, that balance or resistance area up top that we've been looking at. And if we zoom into the intraday charts, it seems like there's still a little bit of supply or sellers up and over those 2280s. We had some issues so far trying to take it and really build any sort of significant legs higher or any sort of price movement higher. And so this is kind of just how I look at the situation here. Right now, stocks are acting really well. But if for some reason you find yourself down below these 2230s for any reason, that would be the first heads up that something's not quite right with the market. And obviously, if you're undercutting these 2215s, 2215s, that's a huge heads up that something's not right with the market. Right now, we do have sort of a low count in terms of what's called a distribution day or a heavy volume selling day. That's one of the ways that we quantify institutional heavy volume selling. So if you did ever find yourself below these like 2230s or 2215s, you'd probably see an increase in those heavy volume selling days. And then, if you break out up and over to 2280s up here, sky's the limit. Right now breakouts are working really well, as we'll see later on in the review video. As we move over to the NASDAQs here, NASDAQs, as you can tell, once we kind of caught a little bid right off those 5,400 whole numbers, we've had a nice little bounce. And in fact, if you look at the NASDAQ on a daily chart, you can see that relative strength starting to creep up there, and that's on the backs of like the Facebook, the Amazon, the Apple, all behaving a lot better over the last week than since mid-November of last year, 2016. So NASDAQ, folks, looking pretty good. It actually kind of looks like almost maybe the 5600s might be the next target on deck. That's the next whole number. We'll have to see if that's the case or not. But folks, as the markets continue to somewhat chop around, S&P, Dow chopping around, Dow still has not hit that 20,000 whole number. What we are seeing are some very powerful breakouts on individual equities, and we'll see that in just a second. As we move over to some of our additional markets, taking a look at the gold chart here. So gold rallying above these 1170s, that was an area we were looking at as potential resistance once you got over there. Folks, we got up to the 1190s today. I've been kind of looking at the 1200s as a potential place for the gold to retrace up to. Folks, not only is it a place of prior support and resistance, if you look at these daily charts here, you can see that 1200 prior area of support and resistance. So I'm kind of looking at potentially a bit of supply, a bit of resistance as we come back up to the 1200. It's a whole number. But if any of you guys study Fibonacci retracements, I don't really use it that much. But if you just pull a Fibonacci on this downtrend line here, or this sell-off, you'll see that actually the 1200 is a place, that first Fibonacci retracement level. So, there's a lot of reasons why this 1200 might serve as a bit of resistance for the gold. We'll have to see how it behaves as we get up to those levels. Taking a look at the bonds here. The bonds bouncing off of that support level going back to 2013. So as we look at this, folks, somewhat sideways action, but very nice support right where it should have come in. And we'll continue watching the bonds here. The bonds have actually rallied over the last 2 weeks, and that has put a bit of pressure here on the 10-year yields. Then finally, as we take a look at the crude charts here, one of the things we've mentioned over the past few videos is that the crude was starting to look a little problematic up and over the 54s. 3 attempts here, like a gap up, a breakout, and then one final test here up and over the 54s has failed. And what that indicates indicates to me and to other chart readers out there is that there is supply, that there's people, I should say, with inventory, and they're trying to get rid of it. That's causing a price ceiling right around the 54s. And one of the things I had mentioned is that even though we were technically hitting higher highs and higher lows, that 54 poses a bit of a problem. And look, you sold off all the way down to like the 51s here. And I think that this starts to put that attempted breakout from that bottoming pattern, that inverted head and shoulders on a weekly chart, this starts to put this in a bit of question here. We are looking at potentially a rally higher after breaking out from the neckline of this bottoming pattern. It's starting to put it in a little question here. I still think that as long as we hold the 49.20s, we still have a chance for a rally. 49.20s is right down here, right? But right now, crude in a bit of a choppy range. Very much there's a clear area of supply or resistance right above the 54s on those whole numbers. All right, so as we move over to individual equities here, here's just a couple of things to just note about what we're seeing in the market. There are some pretty big breakouts occurring, and they're sustained. Here's just, one example of it. MindBody, right, just breaking out huge volume, continue every single day, ticking higher. This was actually on our daily stock picks right in this area right here. This was on our daily stock picks. Here's another one, HQY. We took this trade right over the 42 evens, blasted off 6% on Tuesday, following on another 9.4% gain on Wednesday. Big move. And so this is what we're just seeing here. Breakouts from the high relative strength names, breaking out of recognizable chart patterns. They're holding. They're producing really solid gains. And this is really where you need to be focusing your time and attention. So health equity, another one. Here's a few more, like some biotech names, right, blasting off really nicely. Here's another one of our stocks that we've had on our list here, right, breaking out right over this level, continuing to move higher. So folks, we are seeing some very nice breakouts on volume, and guess what? They're coming from the high relative strength stocks. So those are the ones you're going to want to watch, the ones that are trading up near 5-year or even all-time highs. Those are probably going to be your best bet. As the markets continue to kind of churn here, we are seeing opportunities in individual equities. So, folks, that being said, remember, we've got earnings season coming up. It's starting to ramp up here. Financials are going to start reporting this week and next week, and then all the other tech companies are going to start reporting. So do know when your companies are reporting earnings. Also, keep watching for these heavy volume breakouts coming out of recognizable chart patterns. That always has been, always will be the game plan here at Easy Breakouts. And aside from that, folks, wishing everyone a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that show more right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.